Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Wednesday, August 13th. The euro traded within a 140 pip range and finished virtually flat on the day as opposing forces of rising oil and recovering equity markets served to cancel each other out. Thursday will be chock full of new info. German Q2 preliminary GDP and final CPI numbers for July will be released at 0200. Then the ECB Bulletin, yearly CPI, and flash Q2 GDP will be released at 0500. For 3 days, the euro has been unable to close the trading day below the 1.4900 level. It is very important for the pair to hold this level ahead of huge economic releases tomorrow, which has the possibility to create extreme volatility. Positive numbers in the morning could see the pair close the gap established at the start of the trading week. The cable fell over 1.4% against the dollar after the BOE's quarterly inflation report, which implied that the bank is focusing more on growth than inflation and therefore could be close to entering an easing cycle. In the report, the bank said it expected consumer price inflation to rise towards 5% over the next several months, but also said it believed it would fall below its 2% target level in 2 years' time. Because this prediction was well below previous forecasts, futures markets upped their bets for a rate cut this year. Meanwhile, the ONS said the claims for jobless benefits climbed over 20,000 from June to 864,700. This is the largest increase since December of 1992. The cable continued to move lower throughout the day, which started during the European session after employment data and the Bank of England inflation report was released. The chart shows a pair forming a descending triangle, and as is usually the case, a break lower was the outcome. Since then, the pair has dropped more than 700 pips. The Aussie made a 190 pip turnaround after Australian consumer confidence jumped by the most in nearly 2 years. In August, from a 16-year low as fuel prices fell, wages rose, and the central bank signaled it may cut interest rates. Westpac Banking reported its sentiment index rose 9.1% from July to 86.2 points. A number below 100 shows the pessimists still outnumber optimists, and it was the sixth straight report to do so. The Aussie tested and bounced off of the 8600 level, which has held as support in the past. The dollar continues to strengthen, and the Australian dollar continues to weaken as traders are anticipating the RBA to lower interest rates. The pair closed slightly higher, aided by gold rising more than $18 an ounce. The loonie rose for a second straight trading session as oil gained nearly $4. Yesterday, Statistics Canada said that Canada's trade surplus expanded as energy exports to the United States increased, although prices increased 4.5% and volumes declined 1.4%. Overall, export prices have been on the rise for the past 8 months, while volumes have been trending downward. Imports rose 2%, but movements in volume have not shown a clear trend. The decline in export volumes point to continuing weakening demand and are a further indication that the BOC may reduce borrowing costs at its September 3rd meeting as GDP figures to come in at around 0.5% during the second quarter. There were no economic reports from Canada on Wednesday, but the Bank of Canada will release its summer review on August 14th at 10:30 Eastern Date Time. The loonie seems to have topped out, at least for now, after failing to hold above the 1.0700 level for the third day in a row. The Fibonacci retracement on a daily chart shows that a pullback to the 23.6% level would see a retracement to the 1.500 area. Oil gained more than $3 a barrel today, helping the Canadian dollar to strengthen slightly. The Swissy declined for the first time in 7 sessions as U.S. equity markets declined and treasuries gained. The Federal Department of Economic Affairs reported that the consumer climate declined to -4 in July after June's reading of 2. Once again, the Swissy has tested the 1.0930 level, was rejected, and closed below 1.0900. That same area has provided solid resistance and support in the past. The pair has been on a strong move higher recently as the dollar strengthens. The yen fell because of a carry trade sell-off after the Cabinet Office said Japan's second quarter gross domestic product shrank to an annualized 2.4% after expanding 3.2% in the first quarter, as exports declined and consumers spent less. The economy will likely remain subdued and could deteriorate further as demand weakens from the US, Europe, and Asia this year and next. Exports fell 2.3%. This is the most since the 2001-2002 recession, while imports fell 2.8% as consumer spending decreased 0.5% from quarter one. Consumer spending accounts for about half of Japanese GDP. The yen closed higher today despite equity markets moving lower. Economic reports last night from Japan showed the Japanese economy may be heading for a recession. The daily chart shows an ascending triangle, which usually results in a break higher. If equity markets resume the recent moves higher, we may see the pair strengthen. On the upcoming economic calendar, we have several top-tier releases scheduled for tomorrow. At 0200 we have the German preliminary GDP, and at 0500 we have the CPI for the Eurozone. At 0830 we have the core CPI out of the US, and then at 1030 we have the Bank of Canada Summer Review. In Asian equities, stocks closed lower for a second consecutive day. The Nikkei declined 280 points or 2.11% to close at 13,023. The Australian S&P ASX tumbled 102 points or 2.02% to close at 4951. In European stocks, the German DAX lost 163 points or 2.49% to close at 6422, while the UK's FTSE fell 85 points or 1.55% to close at 5448, and the Dow Jones Stock 600 was down 7 points or 2.54% to 284. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 11,532 after falling 109 points or 0.94%. The index had been down 190 points at one time during the session. The S&P closed at 1285, down 3 points or 0.29%, while the Nasdaq finished trading at 2428 with a decrease of 1 point or 0.08%. Crude oil for September delivery rose $3.46 or 3.06% to close at $116.47 a barrel after a U.S. government report showed a bigger than forecast decline in inventories and gasoline. Gold futures for December delivery rose $16.90 or 2.1% to close at $831.50 an ounce. Treasuries were actually lower even as traders moved away from equities. The 2-year note rose 5.3 basis points to 2.472%. The benchmark 10-year note gained 4.6 basis points to yield 3.941%. This concludes the daily market wrap video, and we appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.